Sudip Bandyopadhyay joins us on the show now. Sudip, let's begin by discussing Amara Raja itself. I don't know the number of times, I think in the last 2-3 months I've asked this question because these stocks are just not stopping. Amara Raja has doubled this year already. Exide is up 80% and there are still buyers.
Yeah, absolutely. I think, look, this transition from IC to electric vehicle, I think is giving a significant opportunity to the battery manufacturers. And remember, in IC, the battery used to be one component, whereas in EV, that's going to be the most important component. And a significant part of the value of the EV will be in the batteries. So the opportunity size for the battery manufacturer in an automobile ecosystem is going up many fold. So obviously the established battery manufacturers, which is Amara Raja as well as Exide, I think they are naturally seeing and seizing the opportunity. Of course, today's excitement is on the back of the fact that the tie-up and the technological tie-up which they have with their Slovakian investee company. They have an investment and they have increased the investment to close to 10% in the Slovakian company, and the technology which Amara Raja will be using from them will help them in aviation batteries as well. I think aeronautics batteries, and I think this is a niche, and of course it will be a high margin business. So obviously there is this excitement. Fundamentally, I believe that battery manufacturers' valuation is warranted. As you mentioned, Amara Raja has doubled, Exide has gone up by about 80%. I think the valuation is fine. It is not overvalued, I would say. Yes, it is at this stage, it is looking fully valued, but not overvalued.
Right, so that's the take coming in on Amara Raja, definitely the stock of the day today. But also just let's take a look at what's the commentary coming in from Adani Green. Adani Green is spoken to ET now. And they're aiming to grow at about 29% CAGR by 2030. Not just that, what they are saying that the key focus areas for the company going ahead is going to be efficient capital management, power storage, as well as renewable energy production as well. They are also saying they're aiming to work at very low cost of capitals in renewables, and they're going to use their free cash flow to incrementally reduce debt. And Anisha, the way how the Adani group of counters have actually bounced back yesterday, you also had Gautam Adani actually address at the AGM as well, trying to basically allay any concerns that were surrounding the company. Also saying that the company is well on track to achieve all of their targets, isn't it?
Yeah, and the fact that they're very, comfortable with respect to the balance sheet. They're saying we will do the fundraise, but only as required. They have a big capex plan. Remember, 1 lakh crore for the entire group. But they say that they're very confident and they have the plan chalked out exactly as to how that will happen. In fact, my colleague Ajay is right now in Ahmedabad, just outside the Adani headquarters, and he's been meeting a whole host of the top honchos at the Adani group. Listen in to what the key takeaways he's picked up.
Well, I'm right now in Shantigram, Ahmedabad, which is the headquarters of the Adani Group, and we had a very interesting meeting with the Robbie, who's the Group CFO of Adani Enterprises. Some of the interesting points which came out from the discussion were how the focus of the group from here on will be about predictability and longevity of cash flows. Their focus is very high on improving the return ratios of companies across the group. Also, their cost of capital has been coming down to below 7%, and the eagerness of global investors to invest in their debt at various projects is only increasing. However, one point which was highlighted by Robbie was how the own contribution of the group now in every project is actually rising, and the dependence on external capital is going down. Apart from that, the other important point which came out in the discussion was that, unlike popular belief, the Adani Group across its businesses is actually working with multiple regulators and also with multiple states. So what people mostly thinking that it's not under any federal government alone, but across states and across regulators. And hence any doubt or question of any kind actually is mitigated by that. It was actually an outreach kind of a meeting to explain the direction of the company and the focus of the management from here on. So it will be interesting to see. They're also talking about over 1 lakh crore of capex across businesses. That continues to remain a focus. But capital raising will only be done if it merits particular projects, and the project's execution is of very high scale and caliber, and capital efficiency, the capital allocation efficiency will continue to remain the focus.
All right, thank you so much for that, Ajay. And coming to you, Kunal, among this Adani group of counters, which one actually do you think stands to benefit going ahead, at least on the charts, given the fact that most of them have seen spectacular rise, but Adani Wilmar hasn't actually lived up to it, no?
Yeah, I think there are a few names which have not performed. Adani Wilmar, I think if I'm not wrong, Adani Transmission Gas, that's stock which has also underperformed. But I think on the on the contrary, there are three names which have done exceptionally well. In fact, Adani Power was a big surprise. The stock started off late in terms of the price recovery as from the 2022 lows. But I think the stock had done exceptionally well, moving back about the 700 plus mark also very recently. I think it was in line of breaking past about the 800 levels, but it was a momentary break for the stock. Nevertheless, I think it's been a very strong recovery. But I think the two names which I would believe could probably be wanted as a buy, maybe a buy on dips also could be Adani Ports as well as Adani Enterprise. I think both these charts have also shown a lot of sturdiness for themselves. Yes, in the last 1 month, what we've seen is a missing of volumes for these stocks, and that's why you don't see any major price activity coming into these names. But I believe that it's a matter of time. Maybe if these stocks are going through a patch of consolidation, the volumes are drying out. But once the volumes start to pick up again, I would believe Adani Ports, Adani Enterprise could probably pick up pace once again. So could be good candidates of buy on dips from current levels as well.
Okay, a good buy on dips for some of these names. We'll watch out for that. But just taking stock of the frontline index and the kind of moves that we are witnessing, it's ICICI Bank, HDFC Bank, Axis Bank. The three of them together are adding almost 110 points to the Nifty on the positive side. And if you add, Reliance to it, there's a gain of almost 125 points, which has been contributed by just these four names. So clearly, it is the banking names which are single-handedly pushing the Nifty higher. But let me talk about L&T as well as some of the other capital goods names because overall these stocks too have seen a bit of a comeback, and my colleague Samir was earlier just pointing out the 100-day agenda with respect to the highway infrastructure which is expected to build up and the overall focus that is going to be there with respect to capex as well. Given that backdrop, Naresh, what's your view on L&T, Thermax, Cummins, ABB, Hitachi, all of these themes of the world?
So all the other names like ABB, Siemens have actually done really well. The risk reward is no more great. But L&T looks the most interesting one because it's gone through a consolidation of almost 4 to 6 months. The stock had made an all-time high of 3,900 on the exit poll day. We've not recovered like we've recovered in the rest of the markets. And on the lower end, 3,300 has been a strong support. So at 3,500, 3,550, one can have a stop loss at 3,350 and still have a view wherein eventually the stock crosses that 4,000 mark.
All right, so that's the take coming in on L&T. Sudip, let me get your take coming in actually on these footwear counters and footwear stocks because, nobody's talking about it of late, be it Relaxo, be it Bata or Khadim. What's your take coming in on these counters in particular, Campus Activewear as well?
Well, I think one is there is a strong possibility of some kind of PLI getting introduced for footwear and leather goods. So if that does come, it will definitely benefit the industry. It does make tremendous sense because it has a significant employment potential. So I won't be surprised if it actually becomes a reality. PLI, some kind of PLI. The second thing I would say is that while there was at least a lot of excitement in these footwear companies, if I have to pick one, probably I'll still go for Bata. The kind of range Bata has, the kind of positioning Bata has, and the kind of SKUs they keep, I think puts them in a unique position vis-a-vis, let's say, Campuswear or Laxos of the world. And the valuation-wise also, I don't think it has gone as high as some of the other names like Campus and all had reached. So Bata can be a buy at current level for a 1 year kind of a hold. And overall, if the PLI comes, I think it will be good for the entire industry.
have actually done quite well for a lot of those manufacturing sector and definitely something to watch out for. But what's the view on Telecom? Today, of course, Ambit came out with a bit of a buy, on Vodafone Idea. That cheered the street, and the entire expectation of a hike, because Somit was telling us earlier that in the last 2.5 years, we haven't seen any price hike. And now they're expecting that perhaps with auctions just around the corner, maybe today evening we'll get the details. The hike might also be imminent perhaps this week itself. Sudip, what's the view on Telecom? Would you be investor in this name?
Well, a couple of things. One is, I think as far as this auction is concerned, I don't think there'll be too much of excitement because now auction is going to happen every year, and by and large, the players have got the spectrums they wanted. Of course, Voda needs 5G spectrum, and they may go out and try and get some of it. But fundamentally, I think the excitement around auctions is a thing of the past. And the comment that the telecom tariffs haven't gone up for a very long time is absolutely correct. Pretty much everything has gone up except telecom tariff. So it's high time that the tariffs go up. And as far as the analyst community is concerned, they have been waiting for the ARPUs to go up for a very long time, and the ARPU going up will change the margin profile of all the companies, whether it's Bharti or Reliance Jio or even Voda. So I think that's a good thing, and it's bound to happen. It will probably happen. About 20% hike can happen within this fiscal, but it may not happen in one shot. It may happen in a couple of phases, and we'll have to wait and watch. And it can happen very soon. The starting of that can be very soon. As far as the stocks are concerned, I think for an aggressive investor, Voda looks good. I know they can still go and buy, assuming a turnaround. But one has to remember that they're still losing customers. They don't have 5G spectrum rolled out. They have a lot of other operational challenges too, and the funding issue to an extent resolved, but it still is a very large issue looming over the company. So only for an aggressive investor, this is a good buy. For a steady play, I think Bharti can continue to give steady returns. And if ARPU goes up based on the hike in the tariff, I think Bharti will provide good returns. I'm not talking about Reliance in particular because it's a conglomerate and it's got multiple components. And of course, I do believe that Reliance also merits buying for a long-term investor.
Aggressive investor, only then you can look at Vodafone Idea. But for steady returns, yes, Airtel definitely continues to top the list. But what's the dealing room buzz today? My colleague Sharad is here to take us through that. And Sharad, over to you.
Well, yes, in focus is Bank of Baroda, and what we are gathering from dealers is buying is coming across the domestic institutions over the last 2 trading sessions. Now, the interest is coming in across 2 to 3 portfolio management services also. And interestingly, over the last 2 sessions, even the volumes have picked up. The DIs overall are holding roughly 16.3% stake in the company as well. But because of the sharp run-up, which we have seen, the 12-month target price for Bank of Baroda, as for Bloomberg, is coming in at 295 rupees per share. That means it's roughly 5% more upside potential for the next 12 months. Interestingly, 98% of the total 35 analysts tracking the stock still have either a buy or a hold rating in the stock. And recently, company came out with an important announcement that the company would be doubling their tech team to almost 3,000 by FY26. And next trigger for the company is, of course, an important fundraising activity which will happen on 5th of July on the debt front.
Okay, Bank of Baroda in focus. In fact, the entire PSU basket will be in focus. Do remember there's a meeting today with the finance minister of some of the select public sector banks regarding certain schemes. So we are watching out for that space, and let's see what comes out of that. But for now, the public sector banks are not active. It's the private banking space, which is the one which is actually doing quite well. In fact, banking, financials, these are the themes we discussed earlier in the day with Samit Vartak as well. Listen into what his view was.
Majority of the time I have stayed away from banking segment, mainly because of the earnings growth not really meeting my expectation of closer to 25%. But I do track it very well. So historically, if you see that 2011 2019 period was a period when PSUs were in really bad shape. They had huge gross NPAs, and then they had to write off their book, and they were not in a position to lend because their balance sheet didn't allow. So it was sort of a vacuum period where, private banks took away huge market share from them, right? But after 2019 cleanup, a lot of these PSUs have recapitalize. They are in pretty strong shape now, and they are back in the game. So it's very difficult now for private players to take away market share from them. And so if you look at the growth of private players during that phase, it was way better than the overall market. I think they will struggle to do that. And hence, you've seen that they have gone through a huge time correction, because I think their valuations went up and now they're correcting. So probably they have reached reasonable value level, but I don't think they can grow at the same rate at what they had grown at during that phase. When the PSUs really go through huge gross NPA buildup and they peak the cycle where now that their bad assets will really hurt their growth, that's when private banks would do well.
All right, and at the day's highest point coming in for the markets, let's actually find out from our charters what are their BTST ideas. Kunal?
So two buy calls. The first one is about ICICI Bank. That's a chart which is looking attractive again from the private sector banking lot. So shifting the move from HDFC Bank to now ICICI Bank. Targets of 1225. Stop loss could now be kept at 1175. And MCX is the other stock which is giving a breakout today above 3900 mark. So would suggest a buy with a target of 4040 and stop loss at 3850.
Naresh, what about you? What are your BTST ideas?
So first is a buy on HDFC AMC, good price volume breakout into new 52-week highs, stop loss at 4050, target price of 4200. Second is a buy on ICICI Bank, continue to like the stock, new all-time highs here as well, stop loss at 1185, target price of 1220.
Okay, let's pull up the intraday chart of mid-cap and small-cap indices, please, because I think they have fallen off from the day's highest point. So while the Nifty continues to build on to gains, Bank Nifty is quite solid. You are seeing a reversal of trend per se on the mid-cap and small-cap index because they are down and out and clearly underperforming the frontline index. Sudip, do you think this is going to be the texture of the market, at least let's say till budget, that large caps and index is the one which is going to probably show better amount of moves versus the mid cap and the small cap?
There are a lot of things which are going to happen till the budget, and the volatility will be the order of the day. Number one, I think corporate results will start coming out from towards the end of first week of July, and it will be keenly watched. And by the time we sit for the budget, a whole lot of corporate results will be there with us to act and react. The second and very important factor is the fate of the monsoon, the intensity, the distribution, and the entire monsoon-related question marks will to a great extent be resolved, and that will be a very, very powerful input. So with these two inputs, we'll sit for budget, and of course, we will have to see what comes in the budget. Now, under the circumstances, we believe that the large caps will definitely be under focus and will act and react based on results which come out and the monsoon progress. We will also see some excitement in mid cap and small cap nearer the budget based on the budget expectations, which will start building up.
Right, so that's the take coming in on the broader markets, but one space definitely that has been excited of late, and it's been a while, it's not only off late, it has to be the alco beverage space, Kunal, be it Radico Khaitan, be it United Spirits, all of them have actually seen good price action of late. But what's your take coming in on the progress going ahead for them? Do you think that the interest will continue to remain in the space?
Well, yeah, I think because you're seeing fresh breakouts and it's more of a consensus or a synchronized breakout for many of the stocks. Like Radico, for example, is looking quite strong. The stock confirmed a breakout above the 1800 mark, if I'm not wrong, just about a few days back. Then you have United Breweries, which over the last couple of weeks has been showing good traction. So I think except for some distilleries, because of its certain news flow, I think the stock has underperformed. But I think most of these stocks from the pack, they have started to do pretty well. United Spirits, I would not recommend as a buy, but yeah, I think the stock, gets into this odd habit of a very slow, gradual uptrend, whereas most of the other peers, the likes of Radico, for example, these stocks, they would tend to outperform. So I would believe that from a trading play, Radico is something which I would be bullish on from current levels, and my sense is that in this leg of uptrend, the stock could probably come back to that 1900 plus mark also.
Okay, interesting takes on the alcobev industry. But Sudip, wanted your take with respect to some of those other sectors, let's say chemicals, textiles, sugar, etc. Have there been any niche ideas that you have looked at recently which you are becoming positive on, or something which you have booked your profits out of, or recommending that? Any changes with respect to your ideology?
Well, I think the fertilizer and agrochemical is one sector where we have become bullish. The last week's excitement was based on the fact that some GST concession was expected, and that is to an extent unfounded. I don't think GST Council has yet started deliberating on that at all, so it will take a lot of time. But leave that aside. I think fundamentally fertilizer is one space where a lot of reform measures are in the offing, and we believe that the government is consulting the industry, and there can be a lot of measures which we'll start seeing coming in the near future. Maybe some of it will be announced in the budget. I think we are expecting a good monsoon, so obviously the pickup of fertilizer volumes as well as agrochemical volumes is expected to go up. And overall, I think this industry is in a space where it was not attracting much attention. It was kind of languishing. Prices have moved up quite a bit in the recent past, but still, I think there is a lot of steam left. So, a Coromandel International at current levels, RCF even at current level for a 1 year kind of a hold does look good. Agrochemicals is one space again. I think one needs to look at. It was down and out for a very long time. The performance was nothing great, but I think things are turning around slowly. The global scenario is also changing. So for an aggressive investor's point of view, some of the agrochemical names like UPL can be looked at. But remember, this is an aggressive position. There may be some downsides in the near future. But if you're taking a 1 year kind of a view, I think it should be a good buy. As far as sugar is concerned, there's a structural change in sugar. The ethanol blending and the related increase in the ethanol blending, I think, has created a favorable atmosphere for sugar. But sugar is an extremely volatile commodity, and one has to remember that. Recently, there was a flood in Brazil. International prices went up. The local manufacturers are clamoring for export limit hike, but the government is in a dilemma, and because if export is hiked, limits are hiked, domestic prices may go up. That may fuel further inflation. So it's always a fine balancing act as far as sugar is concerned. So in the short term, it's very difficult to predict, but long term, I think it's good for sugar industry. So EID parry in sugar can be looked at for a long term point of view.
For the spotlight then on the hospitality sector, remember that there has been no stopping for this one ever since after the reopening trade actually played, and it continues to play for the entire sector. In fact, earlier on in the day, we spoke to Lemon Tree Hotels, Patanjali G. Keshwani, who's the chairman and managing director of the company, to understand what the occupancy levels is looking like and what's the trend that they are making out right now. Let's listen into what he had to say exactly.
You can say that in spite of heat, it was, a decent performance. I'm looking at trend lines, and I expect the catch-up will happen really from Q2, when there will be improvements vis-a-vis the previous year in occupancy. If I look at the trend lines on an annualized basis, then I'm pretty sure that this year will be better than the previous year. But this quarter was not better than the previous quarter. It was roughly the same in terms of demand. I think it's a great idea because this enables you to participate on a distributed basis, on a de-risked basis, across the future of the travel and tourism sector in India. By the way, 200 billion is only 6% of GDP, and the global average is over 10% average. So I think there is a lot of growth and a big runway for the tourism and travel sector in India. And this putting it in this index, I think is a great way to participate.
Okay, that stock high by around 2.5%. Foreign other cues from across the globe are not very healthy. If you look at the European markets right now, DAX is down almost 1%. The French CAC is down 0.5% as well. The FTSE is just around the flat line. And even if you look at the pre-market rates coming in from the United States, it's a mixed picture. While Nasdaq is bouncing back after the crack we saw yesterday in the semiconductor names, Dow futures are down almost 20 points. And not a big cut coming in, but nothing to write home about. But given this kind of context and given the fact we're just at the cusp of expiry, Kunal, would you carry forward your long positions overnight?
I think it's a good time to try and at least book partial profits on the index, both the Nifty and the Bank Nifty. Of course, I think there could be a follow-through up move tomorrow after such a kind of a strong uptick for both the indices. But just because of the expiry of the Bank Nifty tomorrow, I would probably believe that it's a good time to try and at least book partial profits and then look for a mild bit of a downtick tomorrow morning. If it happens in the first half, I think it could be a good level to buy back again.
Okay, so that's about tomorrow. You don't know what will happen, so perhaps book some of the profits off the table. Thank you, gentlemen, for making time and speaking with us today. But
if you like this video, then like, share and subscribe to ET Now.